yeah, I'm Jodie Phelps. I'm a fully qualified financial advisor. I've worked in the industry for 13 years. I've been advising for about 5, 6 years now. A year and a half ago, I decided to go self-employed. And with that, I now use my skills and experience to help people where I really, am passionate about helping. Two things that are really important to, I'm passionate about, sorry, are financial education. So I don't feel like there's enough around to teach people about how to manage their money. You're not taught in school or university, college, what's a pension, what's an ISA, how should you manage your money day to day. Secondary, I went through a divorce myself. I've got 2 young children, so I realised myself how hard it can be and how overwhelming it is, especially the financial side. So with that in mind, I really enjoy kind of helping people who are going through that separation or have been through it to become kind of financially independent and understand their money. So yeah, that's a little bit about me. So as I said, I've got 2 young children, so often come to work for a break. I'm sure some of you know what it's like. And I'm based down south, so about an hour and a half, hour or so based south from London. But what I'll do now is I'll share my presentation and we'll talk through it. I'll try to finish about 20 to 10, and then you've got 20 minutes to ask questions. I'm sure some of your questions will be a bit more complex or kind of individual, personal to you. So feel free to take down my email address and we can book a complimentary, half an hour call or something afterwards where we can discuss things in a bit more detail. But yeah, I'll definitely make sure we have time for some questions at the end. So right, I'm going to share my screen and hopefully won't have any technology issues. Aruna, can I just have a thumbs up to make sure you can see that okay?
Yes, can see.
Okay, perfect. So hopefully what you'll get out of today is just some tips on kind of improving your overall financial well-being. And then I've gone into some more detail on some particular areas Aruna said that may be helpful for the network. Things like, perhaps managing finance over Christmas, savings for children. But yeah, I'll start. So first of all, a bit about me. So I have explained a bit of that about that to you already. But if you want to take down my email address now, you can, just in case you do have any questions afterwards. I'm pretty sure I have it on the last slide as well. But yeah, something I really do try to do in my work is really simplify kind of financial jargon. I think there's too many advisors who use, really technical words, and I've seen it myself where people could just switch off, because if it's not made simple, then people just it becomes too overwhelming. So hopefully I'll make things as kind of so everyone can understand them. So first of all, so agenda here, so I'll just flick through this because I've spoken about that already. So first of all, well-being is obviously such a big buzzword, I guess, especially since kind of the pandemic, and looking after your overall well-being, your mental well-being, your physical well-being. But what plays a massive part in all of that is your financial well-being. And it's not, having a good financial well-being isn't just kind of having a good amount of money in the bank. It's not at all that. It's more about your relationship with money. So your kind of financial habits, how content you feel with a financial setup. And I guess what you're doing, it's to improve your kind of financial state and achieve your financial goals. So really it's that overall kind of financial health and happiness. So yeah, so here I just asked you to kind of like think this to yourself, really. So how does thinking about your finances make you feel? So if you just think of a couple of, just give yourself a kind of 30 seconds to reflect and think of the emotions that kind of you feel if you think about the words finance or money, how that makes you feel as an individual. If anyone wants to kind of share how they make it feel, that's fine. But I also know it's something quite personal, so there's no pressure to. Okay, so a lot of the things that people do feel when they think about money is you kind of like anxious, out of control. But when people are struggling financially, it can have a lot of adverse effects. So it can cause anxiety, depression, sleep problems, can impact your career, relationships, that can prevent you from enjoying hobbies. So this is the reason, it's really important to take that step back and look at your kind of financial state and see what you can do to improve things. Also, what doesn't help is that money's a massive taboo subject. We're kind of taught that you shouldn't talk about money, you shouldn't talk about how much you earn because it could be deemed as showing off, or and also people are embarrassed to say if they have money troubles, which is really a real shame, really, because when people are worried about money, that's the time they should be reaching out to people. But also we don't really share top tips with friends. Or, I know in my friendship group, no one really says how they look after their money or how much money they've got, or talks about savings or anything like that. It just seems to be a massive taboo. But it shouldn't be. If we're managing to do great things with money and doing things well, sharing that with other people will help them. So it's something I'm trying to kind of combat a little bit. Talking about money will help improve your own and others' financial well-being. So kind of leading on from that, so the worst thing you can do when you are worried about money is bury your head in the sand and not talk about it. But unfortunately, it is the easiest thing to do. So if you are worried about money, one thing I'd say is make sure you speak about it and do seek help. It's also important to understand your relationship with money. A lot of how we feel and how we act, financially, is to do with our upbringing. So you probably, if you think to yourself, words that your parents perhaps said to you when you were younger, money doesn't grow on trees, for example, and that could influence how you are with money. Or you may have had parents who were, in lots of debt, so that may affect how you are, or they had no money, so had to kind of save every penny. But understanding how you are with money and why that might be by reflecting can be really beneficial. And sometimes it's thinking, actually, is the way I act now, is that in line with my own values? Is that how I want to be? Or is it because it was something, was I taught to be that way? So yeah, kind of reflecting and understanding your relationship with money and looking back at kind of spending how much you've had and trying to understand the reason why can be very useful. Okay, so now I'm going to move on. Obviously, there's enough about why kind of financial wellbeing is important, but really about top tips, I would say, for kind of generally looking after your money, and how to improve your things you may not be doing already, which can improve your financial wellbeing. So I'd say it's really important to understand why money is important to you at the moment. So really, and what I mean by this is like the goal. So if, for example, you're saving for your children's education, so the reason you want to be careful with money and save money is because you want to, provide your children with, an education. So the reason I say understanding why it's important to you is when you do then go to kind of spend frivolously or, spend money that you shouldn't, it's kind of reminding yourself, no, actually, the reason I don't want to spend that money, I want to save, is because I want to put my children through, private education, for example, or university. So kind of understanding why money is important is the best thing, because, I can tell you all these tips, but actually what is the reason for you personally that you want to kind of, save money or what you're trying to achieve. I think setting yourself goals is really important. And I personally do this kind of financially, but also personal goals. So it might be fitness goals or, work-life balance or what have you. But setting yourself goals is always really effective, especially I think whatever's kind of measured normally improves. So I would say, beginning of each year maybe, or at a time it suits you, you might give yourself a goal for a year. It might be, I want to save £1,000 this year. It might be a 5-year goal, but setting yourself a different goals, it just gives you that reason to be saving. And then when you do, might have your short-term goal and your long-term goal. If you are in a position where you can regularly save, you can have bits of money going into kind of each of them. But yeah, creating a budget planner. So this is the first step. Anyone who says to me, they're worried about money, struggling with money, the first thing I get them to do is create a budget planner. So, you know, how are you supposed to feel happy about your financial state if you don't understand what's kind of coming in and what's going out each month, and what, you know, you've got left to kind of save or play around with at the end? So creating a budget plan of your kind of real, you know, essential spending, so your bills every month, and then also your kind of fun money. And then what I would recommend to do is have an account set up for your bills, so you know that all your essential money is going to be in there every month. So it might be, you know, £1,000 covers your bills. That goes into your bills account each month and will pay for the essentials. And then you could send yourself, you know, into a different account, your fun money for each month. So you may say, do you know what, I'm going to have £500 because I can afford to, for me to kind of go for lunch and do whatever you like to do. So yeah, so you have your kind of fun money, your bill money, and then set a budget for how much you can save each month. So it might be that actually I can definitely afford to save £100. And with savings, having that regular amount that goes out it's kind of like out of sight, out of mind. You don't miss it because it's not there. But yeah, I think having a real understanding of what's coming in, what's going out, what can you afford to spend if it's for fun, what can you afford to save. Yeah, you can't really plan anything financially unless you know these things. I can share a budget planner that I use with my clients, to Aruna, who can share it with you all. But it's definitely a useful exercise to do. But also to review it as well, you know, because obviously these things change over time. So step 4. So it's always important to pay off debts. I have some people who say, you know, I want to save money, should I invest some money? But if you're paying, you know, 30% on a credit card, your priority should be paying that off first. So it's always an area I'd consider is what debts you have, what interest rate you're paying, affordability. But yeah, it's always good to pay off debts. Save where you can. So as I mentioned before, allocate an amount that's comfortable to save each month, and then, you know, put it into your different kind of pots for your different goals. And yeah, I mean, depending on your situation and the term and everything is dependent on where it goes to. But generally, make sure you're saving where you can. On top of this, you know, ensuring you've got an emergency fund. So I usually recommend about 3 to 6 months worth of outgoings, essential outgoings, to be in an emergency fund. And this is just in case, you know, your boiler breaks or you have something that goes wrong that you can kind of draw money from. So step 6, review your household bills. So a lot of people, you know, their car insurance, home insurance, electric, they just kind of roll over every month. And what you'll find is companies just tend to you know, put the prices up every month, every year. So kind of making sure that rather than just letting things roll over each year, reviewing these and making sure you've got the best deal out there. Review your current financial products. So this is where I come in quite a lot. So if for example you have a pension pot sat there, it's building up, make sure that's suitable for you. You know, is it in the best place it can be to grow, to provide you that financial, you know, security later on in life? Your savings accounts, are they the best savings rates you can get? But just making sure anything you do have in place are, you know, the best and the most suitable for you, I guess. Step 8. So be aware of bad spending habits. Something I know myself I've been very guilty of before. So if you're feeling a bit stressed or a bit down, one thing that will instantly make you feel better is buying yourself something, or, you know, spending money. And obviously you get that instant gratification, but obviously later on it may, you know, make you feel worse because you bought something you didn't really need, or it's made you, you know, struggle for the month. So I think being aware, if you do have that habit, that you could be, you know, retail therapy, spending money to make you feel better. What I've done personally is have a small list of other things that I really like doing. So it might be like, you know, have a long bath or FaceTime a friend, go for a walk. And in the moment when you feel yourself about to buy something, you know, put it in the basket and just think, do you know what, I'm going to go away, I'm going to go and do something else I enjoy, and guarantee when you come back, you probably won't end up buying it. But I think just being prepared with these other kind of nice things that you could do to make yourself feel better in those moments is really handy. So number 9, so this is really important, I think, especially when you've gone through a separation or going through separation. It's ensuring any protection policies you have are suitable. If you are married or in a relationship, it may be that you've got life insurance set up. If one of you pass away, the other one's then financially secure. But when you're on your own, your needs are very different. So it's something that I help with a lot, in reviewing clients' protection policies and make sure what they have are worth paying for, or need, if they need adjusting, if they need cancelling. But it may be actually it's more important to you if you're on your own to ensure that if you were ill, you had a payout, rather than if you passed away, your family might be actually okay. So yeah, I'd say it's a after separation, just have a look through what you've got and speak to an advisor to make sure what you've got is suitable for you. Number 10, educate yourself. So I think it's really good to be financially savvy, and there's lots of online resources, but also feel free to take my details as well. And understanding things like what is an ISA, or what is a junior ISA, how can I save money for my children? It's a really good kind of life skill to have. So anything you can do to educate yourself financially will really kind of help you, and especially if you're sharing it with your family, help them too. Step 11, so invest in your earning potential. So if there's a course you can do, or something to get you that promotion, get the next job, it might be an expense in the short term, but it could then lead to a kind of higher income, which will help later on. And then the final one here is just regularly review your finances. So I'd say sit down, do your budget planner, set your goals, set yourself an amount you can save every month, monitor it, and then the next year come back and what's gone well, what hasn't gone well. If something's really not working, how can you adjust that to make sure it does work going forward? But yeah, just making sure you regularly review, because as we all know, life changes. It's always has its twists and turns. So just make sure your plan you put in place is, if it's not working, adjust it, set yourself new goals as and when. But also, just written on the bottom here, make sure you celebrate financial milestones. So if you've given yourself a goal to save £5,000, go for a meal or do something to celebrate it, because that will help kind of keep you motivated and on track. So here I've just noted down some different ways you can save for children. So we've got junior ISAs. So you can put into a child's ISA at £9,000 per tax year. An adult's ISA, it's £20,000 a tax year. What I will say is, just for the purpose of the presentation today, anything I'm saying, isn't advice, because I can't give advice without knowing your individual financial circumstance, and it's different for everybody, so it's more kind of just factual information today. But like I say, I'm more than happy to pick up with you individually after if needed. So yeah, junior ISA, you can put in £9,000 a year. Children's savings accounts offered by banks with different interest rates. You've got a child trust fund. They're not around anymore, but some of you may have them for older children. Stocks and shares ISA, junior ISAs, so same as a junior ISA, £9,000 a year can go into this. However, the money's invested. And then we've got NS&I, children's bonds, and you can also create a pension pot for children as well. One thing I would say to bear in mind is your time scale. So anything kind of 0 to 5 years, up to 5 years, I'd say your best place is usually kind of cash savings. Because we don't know, as we know, the last few years we've had a global pandemic, a war, cost of living crisis. We don't know what could happen, but anything longer than that 5-year period, so you've got a real opportunity to grow that money through investments. And when I say investments, it doesn't mean all completely in the UK stock market, for example. It's having like a broad, diversified, so lots of different things within this investment. But what it does, it gives that money in the longer term. If you've got a child who's, for example, 8 and you want them to have the money when they're 18, you've got 10 years where that money could be growing. So you've got a real opportunity to grow that money. So it's just a lot of my clients who do have the really younger children, I just say, in cash, the money will just appreciate over time. It won't keep up with inflation, and it won't keep, its spending power. Whereas if you do consider the kind of stocks and shares junior ISAs, it's just a way of giving that money potential for higher returns. Okay. So the next, I've just got a slide around top tips on how to manage your money over the Christmas period. And this is kind of catered for people who have gone through separation, really. So the first one on here, we've got acknowledge that the holidays may be different post-divorce. This doesn't need to be a negative thing. I think embrace it. It's time to make new traditions. What do you want to be your kind of family tradition every Christmas going forward? So I guess it's just, obviously it will be different, but trying to kind of have that positive spin on it. So actually, what do you want the traditions to be? Be aware of potential for emotional spending. So as I spoke about earlier, when you are feeling down or stressed, it's so easy to spend, but I mean, Christmas is expensive anyway. So just being aware that you could, end up emotionally spending, hopefully help you not do that. I think develop a budget that reflects your changed financial circumstances. As you all know, like going through a divorce, financially, it completely, throws your world upside down. You've gone from 2 incomes to 1 income. So just having a look at how much, you're prepared to spend and how much you can spend without putting yourself into a bad position. And also without, if you have savings there for other goals, you don't want to suddenly use them all on Christmas. So it's just kind of coming up with a budget that suits you personally. Create a list of people that you want to buy gifts for, and I'll try to set budgets for each and make sure you don't go outside of those. Consider creative and thoughtful gifts. Christmas is, for all of us, the things we love about Christmas is probably, spending time with people and the things that are free. So actually consider alternatives to spending lots of money. Keep track of your spending. So set the budgets, but also make a note every time you spend money on it, just to make sure you are keeping to the kind of budget you set yourself. Plan holidays meals in advance, especially with bank holidays and funny shop opening times. I think making sure you're doing your food shop each week and planning what you're having, it just stops you from then ordering takeouts at the last minute, which can be expensive. Also be mindful of the impulse purchases when faced with holiday sales. I think the classic Black Friday recently, it's just in us, if you think a sale, you end up having buying things that you probably didn't even need or want because you feel like you're getting a bargain, but actually asking yourself, do I really need this? Just because it's on cheaper, it's still you spending money probably unnecessarily. I'd say, as well as the setting limits on the amount, consider secret Santas with friends and family. So if you've got a group of friends, either agree a budget between you, say, let's both spend this amount, because it probably just makes you feel better. But also consider secret Santas. So me and my family, the adults, are doing secret Santa this year, and it's just so much of a less of a financial strain, just spending an amount on one person. And I think everyone feeling it at the moment. Cost of living is massively increased, and if there's a way that you can kind of save money and still enjoy the Christmas in the same way, then it's really beneficial. I'd say also make sure you do prioritize activities that bring you joy and contribute to your well-being, especially if you're quite recently separated. It's always a hard time to go through Christmas, a family kind of time in your changed circumstance. So make sure, if you are setting your budget, maybe put something in that will make you feel good about yourself, or make sure you're doing something to contribute to your well-being. I'd say after the holidays, review your spending. Did you stick to the budget, and what worked well, what didn't? And this will just help you make a plan going forward for next year. But also make a note of your Christmas payday, because it's usually earlier, which means you will then have the longer stretch between your December payday and your January one. So just them being aware of that next gap, you may have to try to be a bit more careful with money until the next payday. And then one thing I'd always say is, if you are, if you do really enjoy the holidays and want a good amount to spend, start saving a monthly amount, even if it's just a little bit, and that could be your kind of one of your goals, your kind of Christmas money for next year, so you don't have to be as worried about money. So yeah, hopefully that helps. So that's the end of the presentation.